Hey guys, what's up? Alec back with the daily stock market, and look at that. The account is now above $75,000 and over $17,000 made just in the past 6 months. In the past 1 year, we're up $28,000. So, yes, it is exciting times and a great time to be involved in the stock market because we can see stocks zoom higher as S&P 500 notches 30th record close of 2024 alone. So there's just been new all-time highs for most of the stocks that are belonging to the S&P 500. The Dow Jones climbed out of an early morning losses to jump 0.5% or nearly 200 points. Technology and consumer discretionary related stocks powered the major averages on Monday as Apple, Microsoft, Tesla, and Broadcom closed higher. Stocks have climbed higher as Wall Street analysts have increased their year-end forecast for the S&P 500. The benchmark index topped 5,400 level for the first time last week. So with stocks roaring higher, we should see some start to split, like Nvidia, for example, just split. So is there stock splits ahead? That's what we're going to be talking about in this video. 3 AI stocks posed for a split after Nvidia. And before we dive into this quick video, just make sure you're following at the daily stock market. Now 233,000 followers, 941 posts. You can see we just reached over 250,000 people in the last 30 days alone. So we've been getting inundated with requests to join my private trading group. And if you want to join that private trading group or get on the wait list, click on Success 2024, Success number 9. And you can see some awesome success stories from the private trading group, up $4,000 in the past year. The account was up 80%. Does your portfolio look like this? DM me for an exclusive chance to work together. Also, by the way, small accounts are welcome. You can see this trade was $9 to $82 overnight, over an 811% gain. So if you want to learn how to do that for yourself, DM me the daily stock market. I'll have a few more spots open this week, and then we're going to be going to the wait list. But let's dive right back into this video about stock splits. Despite its comeback, Microsoft has gone 21 years without a stock split. Holy cow. A recent study by Bank of America revealed that stock split stocks have outperformed the S&P 500 for decades. Okay, so as we scroll down, we can see several companies could look to replicate Nvidia's post-split success. Artificial intelligence superstar Nvidia announced a stock split on May 22nd. As we all remember, share price have climbed more than 36% since the announcement. The wild success could have some other AI companies on Wall Street contemplating following suit. And what we see here is a little note in parentheses, which is something to highly consider because it says even if the stock split isn't necessarily the sole reason behind the stock's success performance for Nvidia. Remember, a stock split doesn't change anything about the underlying business or valuation or even the fundamentals of a business. It just divides the stock into more shares, proportionally lower prices, and per share financials. Companies split their stock for numerous reasons, including making shares easier to buy and sell for employees who might get them as stock options in lieu of payment, and investors. With Nvidia finalizing its stock split on June 10th, the question that naturally follows is which AI company might be next for the stock split. Here we can see 3 are identified: Microsoft, Meta Platforms, and Super Microcomputers, ticker symbol SMCI. So Microsoft is one of the best candidates for a stock split as the company that has recently. So Microsoft could be one of the best candidates for a stock split as the company that until very recently had the world's most valuable market cap. Microsoft is not a surprising candidate for a stock split considering how much stock price appreciation it has seen in the past few years. The surprising thing about Microsoft stock is that it has been more than 21 years since Microsoft last split its stock. So that could be a good, a bullish thing for the split, but it could also be a bearish thing, indicating that they haven't split their stock in the last 20 years. So why are they going to do it just because Nvidia did it? So here we can keep continuing to read about Microsoft. Between the late 1980s and early 2000s, when Microsoft was the dominated PC operating system company, stock splits were much more common. During that period, the stock split 9 times. However, the dot-com market crashed and then rise of Apple chipped away at Microsoft's leadership over time, particularly after it launched the iPhone in 2007. Between 2000 and 2014, when Steve was CEO, Microsoft stock lost 37% of its value. The state of the company finally improved when Satya Nadella took the CEO position in 2014. He redefined Microsoft as a cloud company and later a leader in AI. Over Nadella's 10-year tenure, Microsoft stock has risen more than 1,100%, taking it to $440 per share at the time of this writing. Now, the second one that could have a stock split is Meta Platforms. We saw that they have never issued a stock split in the history of the company, but the time might finally be here. All in all, 2024 has been a great year for the Magnificent Seven. Indeed, 6 of the 7, Tesla being the only exception, have recorded double-digit percentage gains year to date. Yet of these stocks, only one has never split its shares, Meta Platforms. And this could be the time for Meta's first ever stock split. Here's why. First off, the stock is expensive. A Meta share trades for around $500 per share, placing the stock beyond the reach for many retail investors. By implementing a 3-for-1 or even a 5-for-1 stock split, Meta could significantly lower its share price and make the stock more accessible to retail investors who might not be able to buy fractional shares, potentially reducing the share price to a more reasonable range of 100 to 175. I think if they do a split, they'll probably do a 5-to-1. They probably would not do a 3-to-1 in my personal opinion. As we continue to read, we can see a recent study from Bank of America revealed other compelling reasons for Meta to split its shares outperformance. The study, which examined stock splits since 1980, found that stocks that were split beat the S&P 500 during the 12 months that followed the split. This was true in each of the last 4 decades, and we can see the chart below. So feel free to pause the video and look at that chart right there. Stocks that split usually outperform the market. While many investors would likely cheer at a Meta stock split, it's far from a given. Meta's management isn't a fan of the stock splits. In its 12 years as a public company, Meta has never performed a stock split. That's a stark contrast to the other tech megacaps like Adobe and Microsoft, who split their shares 4 and 7 times, respectively, in the first 12 years of their existence as a public company. At any rate, investors should keep a close eye on Meta Platforms. Stock split or not, the company remained one of the top performing tech stocks thanks to its lucrative digital advertising business, with its Q1 revenue growing at 27% year over year and earnings soaring 127%. Long-term investors would be wise to consider Meta as a buy and hold candidate. And the last stock that we'll be talking about in this video, Super Micro Computers, could opt to refuel its rally with a stock split. For a while, Super Micro Computers was seemingly the AI version of Robin to Nvidia's Batman, but share prices have stalled and declined after topping out at $1,229 per share. Meanwhile, Nvidia keeps climbing to new all-time highs. Here's why Super Micro Computers, or Super Micro as it's also known, could still get back on track, necessitating a stock split. The company sells modular server systems for data centers. This is great for companies that don't have expertise or time to custom build their own and just want to deploy compute as quickly as possible. Like Nvidia, Supermicro has become a go-to choice as AI spending surges. You can see below how revenue growth has accelerated 200% year over year, and management has underlined this by noting that demand for its products are drastically outpacing the broader industry. Evidence suggests that Supermicro could benefit from data center tailwinds for some time. According to Newmark, AI will drive enough data centers demand to double its power consumption by 2030 from current levels. Supermicro has done nearly $12 billion in the trailing 12-month revenue. Analysts believe annual revenue could double to over $23 billion by just next June. So if you don't have Supermicro on your watch list, definitely one to add in the next 12 months, 24 months. It could be extremely exciting. Meanwhile, the company has a healthy outlook for earnings growth. Analysts believe earnings per share will grow an average of 52% annually for the next 3 to 5 years. In other words, AI tailwinds remain intact and fundamental strength should eventually push shares higher. Today, the stock trades at a forward P of 33, making it a bargain if Supermicro realizes such strong earnings growth. These catalysts could drive Supermicro computers higher, an exciting prospect for investors. So 33 is great for the PE, and it's basically saying if they actually double their revenue and grow their earnings per share by 52% annually, then forward PE ratio of 33 is an absolute steal. So why split the stock then? The company has never split its stock despite shares appreciating over 9,400% since its IPO, now trading over $800 per share. The stock is harder to buy and sell, less liquid, and a lot of people like to trade options. And the thing is, it's harder to buy an option contract when the share price is $800 per share compared to if the share price was like $80 per share, for example. It's harder for investors to slowly buy shares over time without having a ton of money. Employees sitting on profitable equity in the company must sell its chunks when shares trade at such a price. Splitting the stock lowers the share price and alleviates these problems. Plus, the positive attention a stock split usually generates could help move the share price again after the shares have stalled in recent weeks. It's a potential win-win for everyone. So if we look at what analysts have to say about SMCI Supermicro, we can see they're currently sitting at $887 per share. And on average, analysts have a 20% upside for the stock to around $1,066 per share, which is again a 20% upside. Some analysts have them as high as $1,500 per share. And the biggest risk any analyst sees with the stock is $800 per share. If we scroll down, we can see that these were just reiterated 12 days ago. We have some 4 and 5-star analysts coming in with above $1,000 per share price target. We see the Wells Fargo with a 15 days reiterated $890 price target. So overall, AI stocks are probably going to keep benefiting over the next 12 to 24 months. And any of the stocks that go ahead with the stock split, whether it's Microsoft or Meta, that's going to be another bullish thing to be watching out for. And it's a good chance that once they split, that 12 months following, that stock will beat the S&P 500. So there's even a good chance that Nvidia is going to beat the S&P 500 in the next 12 months. And I posted that on my story, and I think all you guys saw it. So last month, I actually did a message to reveal the new Instagram feature, and hundreds of you guys message to reveal and found out my thoughts on Nvidia. Someone was saying, do you think it's too late to buy into them? This was May 29th, by the way, and I said definitely more risk to buy now and not nearly as much growth potential over the next 12 to 24 months. But the question should be, can Nvidia beat the overall market in the next 12 months? And the answer is probably. It probably can. And why I said there's not nearly as much growth potential at these prices for Nvidia, because it's already a $3 trillion market cap, and the stock price in the last 2 years is up around 800%. So it's basically fundamentally impossible for Nvidia to even go up another 200% over the next 12 months. You know, if we even get 30-40% over the next 12 months, I think a lot of investors will be satisfied and happy with those gains for Nvidia. So don't expect, 200, 400, 800% gains in the next 24 months from something like Nvidia. But if we can beat the S&P 500 and the stock market as a whole, that should be the goal moving forward for Nvidia investors. So thank you guys so much for making it to the very end of the video, and you get some extra tidbits of information and tips if you make it that far. As you can tell, we just talked about Nvidia for a little bit. So if you appreciate that, smash a big thumbs up on this video. Subscribe on YouTube for all the full-length videos so you don't miss out on any of those. If you want to join the private list, message me here on Instagram. You can follow my trades. You can see exactly what I'm buying. You can get alerts when to buy, when to sell, strike prices, option trading, swing trades, expiration dates, and everything in between. So thousands and thousands of students have become successful at this point with the private trading. It's now your time to become the next success story. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.